Hello and welcome to Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. International Finance Corporation and the Central Bank of Nigeria sign a deal to boost local currency financing in Nigeria. And Egypt's net FX reserve surges by $13.5 billion in 2 years. Plus, Zimbabwe sees $16.3 billion in diaspora remittances in over a decade. And it's great to have you join us. I'm Ladi Williams. Let's get a check on the markets. Now, we're seeing a lot of big movements in the market, but we see gold prices fell today on the U.S. As the U.S. dollar held firm. That's the DXY, while investors waited U.S. economic data for fresh insights on the Federal Reserve's monetary policy path. That's what investors just want to know. But we see spot gold there, a big pullback, about 0.5% today, $2,733 per ounce. U.S. gold futures down lower by 0.3% at $2,745 per ounce. But we see the dollar index, that gained about 0.2%, on track for its best month since April 2022. And we know a stronger dollar makes gold less appealing for currency holders. And we see other metals also following, with spot silver down almost 1%, $33.39 per ounce. Platinum not left out, 0.1%, still holding on to that $1,000 psychological level. And we see palladium, $1,189, down 0.3%. We see spot silver there following that trend, even though we saw opposite movements the last time. To the oil market now, we see oil prices, dramatic drop to start the trading week, down 4%. See futures for global crude benchmark Brent slid like 4.34%, $72.05 a barrel. Let's see if this $70 range is going to hold after trading tomorrow and today, because there's still a lot of volatility right now. U.S. grade, that's $68.52 a barrel, down 4.54%, almost 5%. But we'll get a check on what's driving sentiment and what to expect for the oil market later on the show. Now, we see the International Finance Corporation, a member of the World Bank Group, and the Central Bank of Nigeria have announced an agreement to scale up local currency financing, unlocking about over $1 billion in investments across key sectors of the Nigerian economy. The agreement, signed by IFC Managing Director Makta Diop and CBN Governor Dr. Olaimi Cardoso, will provide Naira-based financing to sectors such as agriculture, infrastructure, housing, energy, small and medium enterprises, and Nigeria's youth and creative industries. This deal will enable private businesses to thrive by improving access to long-term, affordable local currency funding, essential for mitigating currency risk. And to other stories, as the International Monetary Fund and World Bank annual meetings for 2024 come to an end, gauging investor sentiment to presentations by economic managers in Africa being analyzed. According to CEO Premium Africa Holdings, Mr. Farouk Kailan, Nigeria and most countries in the sub-Saharan Africa must stabilize currencies to boost investor confidence. I had a chat with him earlier on Business Morning. Take a listen.
Well, one very, very key component of attracting investment is currency stability. A couple of weeks ago, we were having a conversation, particularly about Nigeria. It would interest you to know that in the corridors that I'm operating, Nigeria comes up a lot stronger because it has numbers, it has a massive youth population. So it appeals to investors and is always on the dashboard in terms of the next, opportunity to address. But every time some sort of research is done, instability in currency, it becomes a concern. So as advisors to some of these, high net worth individuals and investors, we always say that, look, we are monitoring governments to adapt exchange rate policies that reduces volatility and provide a more stable environment for foreign investments. Helping stabilizing inflation and boosting investor confidence is very critical. So I would always place it at, exchange rate stabilization is very critical, and that cannot be avoided. Every investor is looking at, this very key, elements of economies to be able to make decisions to ensure that their investments are safe. And in a case where technically you cannot rule that out, definitely there was going to be some amount of capital flights, and exchange rates play a key role in.
And the IMF Fiscal Monitor Report for 2024 shows that highlighted some projections that debt to GDP ratio, currently at 50.7%, is expected to drop to about 49.6% by 2025. It noted that the country's public debt includes overdrafts from the Central Bank of Nigeria and liabilities from Asset Management Corporation of Nigeria. Well, let's discuss this and other matters now with Mr. Sam Chidoka, as MD, CEO, and Korea Advisory Services, joining me via Zoom. Great to have you on the show.
Yeah, good morning, or good afternoon, actually. Good to be here. Thanks.
Always great to have you. So, what would you say are the implications for Nigeria's decreasing debt to GDP ratio? What kind of impact should we expect on its economic stability and especially credit worthiness?
Well, so for Nigeria, it's good news. The World Bank is projecting that our debt to GDP would come down from 50.7% to about 49.6%. What that should generally do is should improve our perception, because there is something about perception, or there's a theory that is called the signaling theory. So this is going to help signal to investors and the world over that Nigeria is getting into a better place. So typically what you would expect is that for that to happen is either our debt burden reduces or our revenue goes up. Our GDP begins to go up as well. So if GDP goes up or debt burden reduces, then the debt to gross domestic product ratio would definitely reduce. If any of that happens, it's a good signal for Nigeria. You would expect that it shows we have improved fiscal health, we have capacity to service our debt, and investors will look at us gladly with that happening.
And, to make this happen, and definitely it's not that simple, at this time where we're seeing a government that's trying to raise, revenue at this time. When it comes to, raising revenue, what would you say are the low-hanging fruits, this government can actually look at right now and say, we can, tap into this to boost our revenue? That's in the short term.
Okay, so in terms of revenue here, you're right, there are some low-hanging fruits. And unfortunately for the government at the center and the managers of our economy, this is not the best time to talk about increase in taxation, because already a lot of people are going through a lot based on the devaluation of the currency and then increase in inflation that we have seen over time, which has affected people's purchasing power capacity and driven so many households with the inability to just sustain themselves. So this is not the best time to increase tax, right? But what you can't do is to have some level of fiscal responsibility, first of all. Even within the revenue that you presently have, there should be responsibility in terms of, let's spend on the critical aspect of the economy. Let's begin to reduce recurrent expenditure and increase capital expenditure and reduce some of this, what I call lifestyle financing that we find for people in government. Aside from that, we need to explore areas of our comparative advantage. One of it is agriculture. We're not exporting it. We're not exporting enough. We're not even producing enough to reduce food inflation and talk more about exporting. So we've got to explore looking for revenue other than oil and gas revenue. We can do that through agriculture. We can do that through services. We can do that through diaspora funding. I think that Nigeria must get to the place where we begin to have policies that link Nigeria with exporting human capacity to get revenue into the country as a direct policy of government. It wouldn't hurt us.
Right, and on talking about hurt at this point, we know the IMF, they have a couple of recommendations, so as the World Bank, for, the Nigerian government to actually stabilize, the currency, helping, boosting revenue at this time and reducing debt. But, looking at all of these recommendations, do you think more pain, should be expected, to the citizens? Because at the end of the day, we've seen how most of the reforms have impacted, ordinary Nigerians.
So you see, whenever it comes to the IMF or the World Bank or Bretton Woods institutions, my view is always you should listen, but you don't have to swallow everything hook, line, and sinker. We do not have to do everything that the IMF tells us to do. We have to take policies and localize them. We have to take policies and put them in tandem with what is happening in the country. If you have a country where you have over 100 million people living in poverty, then sometimes some of the imported policies might not be the best. Because typically what you would hear people talk about tax to GDP, how it is low in Nigeria, how can you grow that pot of increasing our tax to GDP? Yes, but the question is, do we have enough people that have the capacity to even pay the tax? And you have to remember that we run a country and an economy that is interdependent in terms of how people relate. The reason why so many people are surviving in this country today is because those who are making money are supporting a lot of people who are not. So if you tax the people who are making money more, you're also going to affect the people that they support. There's a domino effect. So again, when it comes to recommendations by the IMF, I'll say listen, but you don't have to do it all. Let's localize it. Let's look at what will work within the parameters of what we can do. Let's look at how we can be productive. Let's look at industries that require human capital and we can create more employment, reduce inflation by coordination between the fiscal and monetary policies that are in place, and try to get the economy working. And when we have more people that have capacity, then you can talk about some of the recommendations of the IMF.
And we've also seen recommendations to the central bank, for keeping rates high. At this point, we've seen how the CBN has tried to tackle rising inflation by increasing rates at most of the meetings, and there's also expectations that rates can even go higher, at this point. So talk to me about how this is impacting, businesses. Most of the businesses listed, on the stock market at this point. I'm seeing that it's a high interest environment and it's expected to stay even higher, going forward.
Look, Ladi, businesses are bleeding, and that's just the truth. With this high interest rate regime that we have, capital formation becomes very difficult, especially when you look at the debt side of capital. Typically, we would always say in our markets that equity is more expensive than debt. Why? Because the equity return expectation is usually higher than debt. But today, the debt market is probably higher in pricing than the equity market today in terms of equity expectation. When you have a situation where a company goes to a bank to take a loan and you have to pay over 30%, 35% in a working capital loan, what sort of business is that company doing that will return 35% and return something else above it, a premium above it, that will take care of their other expenses, pay salaries, overheads, and still be able to make a buck? So in this high interest rate regime, we understand that the central bank is trying to fight inflation, and that's commendable because inflation at the end of the day affects all of us. But there has to be an equilibrium point. There has to be a breaking point. Today, corporates are going to the commercial paper markets and issuing papers for 6 months, for 9 months at 28%, 30%, 32%. That's expensive. And that's going to affect their capacity and their ability to keep on to their going concern status as it is. So again, whilst I commend the CBN for trying to fight inflation, I think that those on the fiscal side need to pull up their stocks as well and help to make this work. But continuous increase in rates might begin to bite us in the wrong place.
So you're saying at the next meetings we should have some kind of maybe a hold at this point?
I'm hopeful it will be a hold, because you see, in the recent past, inflation, even when inflation has gone up, it's been going up in a reducing stance, right? So we've seen inflation continuously going up. We saw it taper down just a bit.
All right, we see it's actually raining right here in Lagos, so we're seeing the impact already on Mr. Chidoka's Zoom there. So, Mr. Chidoka, I don't know if you can hear me now. I lost you for a moment there, but definitely the issue about inflation and trying to lower inflation, but at the expense of growth, is definitely a very delicate balancing act there, and we're seeing the central bank, have to, pull through at this time. At the last meeting consensus, when we look at minutes from that meeting, it was all about, raising rates from all of the members and expectations. Investors are always trying to find out what's the forward guidance, what's going to happen, at the next meeting. So all indications are we might actually see more rate hikes at this point. But the question is, how much wiggle room does the CBN MPC, have, to raise rates more at this time? Because at the end of the day, this is sacrificing growth to tame inflation. And, some would say it's not, inflation is not lowering as fast as we would like. And also when it comes to currency issues, we've seen the CBN intervene, in the official window and also in the parallel market, by selling dollars. That's to the BDCs. But we'll definitely see it's a brand new week. We'll see how the Naira performs, and we're also looking out for inflation numbers and the next meeting. That's for November. All right, we'll try and get Mr. Chidoka another time. Seems the internet is not letting us have him. Well, thank you so much. That was Mr. Sam Chidoka, MD, CEO, and Korea Advisory Services, bringing us up to speed on what to expect with all the recommendations and how to address them. Well, we'll take a break now. When we come back, we're going to head straight to the markets, find out what's playing out in the local bourse and global markets that we track. That's in a moment. Just stay with us. Welcome back. Well, let's get straight to the markets now, starting with the local bourse and Africa. At this point, we see the NGX marginally up 0.07% intraday, so it's still looking positive. Maybe we might actually get to that 100,000 level to start the week. That wouldn't be bad at all, depending on how the bulls can, take the market up. For the Nairobi, that's South Africa, 87,168 points, 0.18%. A more convincing move up. Let's look at other markets we track in Africa. We see for North Africa, the EGX 30 marginally down by 0.09% at 30,785 points. Then the Nairobi Stock Exchange, big close for Friday, 1.18%. 115 points from the 114 points in the previous trade. All right, let's discuss what's playing out in the Nairobi Stock Exchange and also the oil markets. Let's talk to Wachira Karuki, he's a CEO, African Diaspora Asset Management, joining me via Zoom. Great to have you on the show.
Very happy to be here, Ladi. It's always a pleasure to be on Channels TV. Fantastic.
So before we get to the Nairobi Stock Exchange, the market, we see the oil market. I want to get your perspective on how, oil traders are playing the market today. We've seen prices down over 4%, to start the week. Do you think traders are overreacting here in the oil market?
I think the market is just reacting to the information that came out over the weekend. I think this particular drop is driven by speculation. We opened the market in a serious gap of close to 100 pips. Market opened at a price of around $68.47 per barrel, which is over 200 pips, 300 pips away from the open. We have never had such a serious drop in the price of oil, so we think it's driven by speculation. And I think this is more politics. And of course, people are just trying to hedge their fears and cover their bases, so to speak. All right, so that happens. It's purely driven by speculation, not fundamentals. And this happens in a trading commodity market. So I really hope traders were holding shorts because there's a very huge gap, as we call it. It's very unusual, and it's crazy huge, right? So some countries' currencies have, of course, dropped because of that. Any petrodollar currency was affected quite a bit. As you can imagine, it dropped quite heavily. But I think it will recover during the week. I think this is a Monday thing. These are positions that were held on Friday that are now opening on Monday in a very huge gap. So we think we'll recover, but we're observing to the market. Because of it dropped, it has stabilized and not dropped again. It's just ranged, as we call it. So let's see whether it's going to rebound or continue dropping. It's a wait-and-see approach. But if you're not in the oil market, I strongly advise you that you are not to enter the market. If you are, then hold your position and let's see how it goes.
So is it safe to, just start the week off on a short trade for the oil market? Is it better to come in and just short the market this week?
Yeah, good question. I think you should have a short bias Case in point, personally, I took a few positions in the morning regarding oil on a short trade, but I don't think it's a very sustainable long trade. I think it's going to recover at some point. But yeah, you should have a bias at the market as a sell. You should definitely not be buying. Don't go against the trend. But wait and see. Today is Monday. There are 5 days in the week. Anything can happen. That kind of a drop. There's also a rationale we have in markets where markets tend to recover and cover the gap, right? So we need to be careful and observe how it's going. I took my short, a very short sell. I entered, the market dropped. I closed at about 40, 50 pips. Market is still sell. In the last 4 hours, it has dropped another 100 pips. So yeah, a sell is a good bet. Yeah, sometimes I tell you what to do and what not to do. It may not continue dropping, but it should not be holding a buy. So let's see how it is going to go, especially at night, especially now when US market opens in 35 minutes time. We expect the US market to shake things up quite a bit. I mean, it's a Monday, market just opened, the New York Stock Exchange just opened, and the competitive exchange is there. Let's see how they treat the market with this information.
All right, let's pivot now to the Nairobi Stock Exchange. We'll see trading. Last week, I don't think it was looking too bad, but for the Friday close, it was a big jump to close on Friday. What do you think drove sentiment, and was it a positive week in total for the Nairobi Stock Exchange?
Right, Ladi. The Nairobi Stock Exchange is doing fantastic. We have some sectors doing better than others. The materials sector and production is also doing pretty well. Materials, industries, telecoms, energy, and utilities. Each of these had at least a 1.5% growth so far in the last 7 days. So we are seeing a lot of expectation and a lot of boom, so to speak. I suspect this is because we are ending one quarter and starting another quarter. That means a lot of purchasing orders that are being done, trying to protect their production value and the capacity, and to assure themselves that they're going to have enough materials to produce in the next quarter. So materials, industries, telecoms, energy, and utilities are doing pretty well. Real estate and healthcare are not doing very well. Financials, healthcare, and industries are not doing very well at all. What is doing significantly negative is anything that is up, especially on consumer staples and what we call consumer discretionary kind of shares. Those ones are doing pretty badly. Otherwise, by and large, the stock exchange in Nairobi is doing very, very well. We're expectant in this new quarter. This is the last week this is the first week of October, which is the first month of the quarter in Q4. So I think nothing much is going to change. I think we may not necessarily drop, but they're going to just keep holding steady and slight growth month on month until we finish the year. Vladimir.
Thank you so much. We'll see how it plays out for the Nairobi Stock Exchange this week. Thank you, Wachira Keruki, CEO, African Diaspora Asset Management.
That's always a pleasure, Ladi. It's always a pleasure to your channel. Thank you.
Thank you. All right, let's get a check on what's playing out in the U.S. Markets now. We'll see. So for the futures, the Dow Jones Industrial Average futures starting off at a back foot, 0.61%, down 42,114 points, 0.03 marginal drop there for the S&P futures. But we see the tech-heavy Nasdaq there fully on the green, 0.56%, 18,518 points. And we see, weekend airstrikes by Israel against Iran did not target oil and nuclear facilities, but we see all of that, playing into most of the trading, even for the stocks. Let's get a check on what's happening with Asia now. We see Asia closed majorly in the green. The Nikkei, 1.82%, closed 38,605 points. The Kospi, a big 1.13%. Marginal gain for the Hang Seng Index at 20,599 points, 0.04%. That's the marginal gain there. For all the markets we track in the area, Shanghai Composite 0.68%. So it's a green on the screen with markets that we track in Asia, with the topics index climbing and supported by weak yen and political uncertainty as the ruling LDP is getting a majority in parliament. So, but it's a big move, and for Asia, closing in the green, even with all the issues with geopolitics that we're seeing in most of these markets, it was able to sustain that green movement. But for the U.S. markets, we saw some kind of change there when it comes to the tech-heavy Nasdaq. That was able to maintain, strongly in the green. But let's get a check on what's happening in London. We have Juliana join us from our London studio. Hello, Juliana. Great to have you. Hello, Juliana. Happy New Week. All right, so I'll come back to you, Juliana, just in a moment. Since there's some technical issues there, but definitely looking at most of the markets now, it's all about the countdown to the U.S. elections. At the end of the day, we know that investors are trying to find out how most of these markets are going to react to a Trump presidency or Kamala Harris presidency. So investors are trying to make that choice before the elections come. So we expect a lot of volatility in most of these markets. But let's try and get Juliana back again. So Juliana, great to have you. I don't know if you can hear me this time.
I can hear you, Laddie. Hopefully
Fantastic.
You can hear me.
I can hear you loud and clear. Fantastic. Thank you so much, Juliana. So we see bond traders expecting the UK to present one of its biggest borrowing plans to record this week. What sound bites are you getting?
Well, it's a big week here in the UK because, of course, it's budget week. This is the first time that we're going to hear some fiscal policies from the Labour government. In fact, we just finished listening to a press conference delivered by Prime Minister Sir Keir Starmer because he is under pressure. I think, of course, it was a historic victory. Lots and lots of promises during the campaign. Basically, the Labour Party promising that after 14 years of Conservative rule, that finally the working class within the UK would benefit from some of the success of Britain over the past few years. That hasn't actually trickled down. Alas, it appears as if that script has been totally ripped up, and it began a couple of weeks ago when we heard from the Chancellor Rachel Reeves saying that she had discovered this £22 billion black hole in the public finances, something that predecessor Jeremy Hunt has denied. And I think that has set the pace for what is going to be delivered in the budget. As I said, the Prime Minister has just finished given a statement to the press in the Midlands, and he basically told everybody that it is going to be difficult. It is going to be a difficult next couple of years, particularly the next couple of months, and he did hint towards there being some tax rises. Now, this is going to be a huge headache for the masses here in the UK because the cost of living, yes, it has fallen dramatically. I think the last CPI data we got from the Office for National Statistics showed that inflation was hovering by about 1.8%, but that is not necessarily trickling down everywhere. We're also getting into the pretty cold months in the UK, and energy prices and gas prices are still quite high. So everybody is waiting for the budget on Wednesday, and as a lot of economists are pointing to, including what you were just saying at the beginning, we are expecting there to be some significant tax rises. So yes, expect more headache for the Prime Minister, because of course this is not what was promised. What was promised is that it was going to be fair for all, but it does look like we are going to have the biggest tax hike in the UK that we've seen in 3 decades.
It's quite interesting, you see the data, pointing towards inflation actually going down, but, consumers are not feeling it, when they go to the markets. But, it's the last trading week of October. What are we seeing on the economic data front, aside from what's playing out with the budget this week?
Well, the budget is the main topic of conversation in the UK, as well as some side hustling, should we say, going on between the Conservative Party. The leadership race has been going on for weeks and weeks and weeks. It's finally down to the 2 main contenders, which is, of course, Kemi Badenoch, who has seem to have annoyed lots of Nigerians in Nigeria, and Robert Jenrick. So the 2 of them will battle it out. I believe that announcement is going to be on the 2nd of November. Of course, nobody can shy away from the biggest election taking place of the year, which is the US election. That is going to have massive implications as to how we govern or how we deal with our closest ally across the pond. There were some reports last week that perhaps some Labour MPs had gone over to the US to endorse Kamala Harris. I know the Trump campaign have set up some sort of legal action there to try and tackle and find out whether or not the British government have been interfering in US politics, pretty unprecedented, but hey ho, that's what's going on there. And a slew of other economic data, but of course the big one is going to be Wednesday. That's what every newspaper and every news network in the UK is listening to, because it is going to affect all of us, including those in the diaspora that have become a welfare system for those in Nigeria who are really struggling at the moment. Tax hikes for UK Nigerians, not great when it comes to sending money back home, Laddie.
Right, and we need all of those funds, sent back, from our UK diaspora this time. But how are the markets looking in the UK?
Well, yes, oil has been hit. I think a barrel of Brent crude is trading below $80. It's dropped about 6%. BP, Shell, they're the biggest fallers on the UK blue chip index, and that's dropped down the entire index at intraday. The all share is down 0.20%. The FTSE 100, the blue chip, that's down 0.22%. And the FTSE 250, the domestic market is down 0.14% at intraday, Laddie. In the currencies market, the British pound trading up against the US dollar by 0.17%, though down against the euro by 0.03% and down against the Japanese yen by 0.03%. You didn't ask me about Manchester United, Ten Hag gone. I'm sure that is definitely going to affect. That's definitely going to affect the markets in one way, shape or form, Laddie.
Yeah, it hurt so bad because I was predicting, that Man U might actually win by about 2-1, but the reverse, played out. Yeah. Anyway, we'll keep watching to see how Man U,
off air on WhatsApp.
Yeah, we'll talk about that. Yeah. Thanks so much, Juliana, for giving us the details. Right there in the UK. All right, let's take it on to Europe now. See what's playing out in Europe. We see the prospect of another Trump presidency. That's in the US has driven down some European stock. Join us with more about how Europe is already feeling the effects of the US election. Next week, we'll have DW correspondent Chimbono Chimbelu. Great to have you, Chip. So just how is the U.S. election affecting business in Europe?
Thanks for having me. Well, Laddie, it is the prospect of the EU facing a trade war with the United States if Republican nominee Donald Trump were to become president. Now, that is what is driving down some European stocks, even though we don't know who will be the next U.S. president until next week, of course, when the elections happen. Now, polls have continued to show that the race is still too close to call, so it could very well be that the Democratic nominee, Vice President Kamala Harris, wins. Still, the shares of companies in European sectors that export heavily to the U.S. have been punished at the markets, and that's mostly the auto industry and makers of luxury goods. Now, one list indicates that the share prices of more than 24 stocks in those sectors have declined more than 7% since the end of last month. Now, that includes companies like German car maker Volkswagen and the luxury goods conglomerate France's LVMH. Investors are worried that Trump would impose tariffs. He has said he would introduce tariffs of 20% on European goods.
All right, all about tariffs. So what is being done to prepare for a Trump presidency?
Well, ambassadors from the EU's 27 member states met with top EU officials, according to a report by Political, which cites 12 diplomats as its source. And it's not just trade that they are concerned about, but also what a Trump presidency could mean for the war in Ukraine. The Biden administration has been a major supplier of arms to Ukraine, and there is concern that that would change with a Republican administration. Now, the party has already tried to block aid delivery to Ukraine, but the EU doesn't want to be caught by surprise like it was in 2016 when Hillary Clinton lost to Donald Trump. So this time around, the bloc's leaders want to be prepared. They want to make sure they have a game plan in place. And they know that a Harris administration would broadly mean a continuation of Biden's current foreign policy.
All right, what can we expect in European markets?
Laddie, European stocks are expected to trade higher today. Now, this week, investors will be looking more at what is happening in the U.S. 5 of the so-called Magnificent 7 mega-cap companies are set to release their earnings. From Tuesday to Thursday, Google parent Alphabet, Microsoft, Facebook owner Meta, Apple, and Amazon will be reporting. And of course, there's the US jobs report to be released on Friday, November 1st. A stronger than expected economy in the US could mean fewer interest rate cuts by the Fed. And here in Europe, there's not much expected in terms of economic data today, but investors will be looking to Thursday when the Eurozone's flash inflation and unemployment are due. Now, that data may provide some signals about how the European Central Bank may pace interest rate cuts.
Right, so much respect there, and definitely Q3 earnings season in full gear. Thank you so much, Chip, for giving us the details from Europe. Let's get a check on major stories coming out of Africa. Now we see international foreign exchange reserves for Egypt. We've seen a significant boost there by about $13.5 billion over the past 2 years as of September 2024. The reserves stood at about $46 billion, up from $33 billion in August 2022, and that's according to recent data from the Central Bank of Egypt. We see Egypt also witness successful economic reforms and increased foreign direct investment. A major contributor to this surge was the Ras Al Hekma project, a joint venture with the UAE, which is expected to attract over $150 billion in investment. Egypt's foreign reserves play a crucial role in securing essential commodities, servicing external debt, and addressing potential economic issues in Egypt. Also, we see the Central Bank of Egypt is auctioning 15 billion Egyptian pounds worth of fixed coupon treasury bonds in coordination with the Ministry of Finance. The 2-year T-bond is valued at 5 billion pounds. To be matured on October 1st, 2026, at coupon rate of 25.07%. The second auction is for a 3-year T-bond valued at 10 billion pounds and will be matured on October 1st, 2027, at coupon rate of 24.45%. Also in Egypt, Egypt and Algeria's trade exchange reached $622 million in the first 8 months of 2024. That's according to the Central Agency for Public Mobilization and Statistics, that's CAPMAS. Egypt's exports to Algeria rose to $605 million in the January to August period, up from $556 million during the same period last year. We see perfumes, cosmetics, plastics, iron, steel, electrical appliances, and copper drove this increase. Egypt's imports from Algeria amounted to about $17 million, up from $8 million during the same period in 2023. The principal imports, that was chemical products, iron, steel, glass, rubber, and other materials. Algerian investments in Egypt amounted to $13.7 million during the fiscal year 2022-2023, while Egyptian investments in Algeria stood at $4.5 million, and all of that data are coming out from CAPMAS. All right, let's take it on to Zimbabwe now. We've seen a significant influx of diaspora remittances totaling $16.3 billion over the past 10 years, as more Zimbabweans living abroad send more money back home to support their families amid challenging economic conditions. In a recent presentation on the state of social services and poverty eradication in Zimbabwe, Public Service, Labor and Social Welfare Minister July Moyo highlighted the government's efforts to provide social protection for citizens through various policies and programs aimed at alleviating poverty, assisting vulnerable populations, and fostering economic growth. Said this has been achieved through policy and program interventions aimed at reducing poverty, assisting vulnerable populations, and fostering economic growth and stability. While the value of mobile transactions in 8 months to August grew by 750 billion shillings, and that's happening in Kenya. That's if you compare that to the previous year. Statistics by the Central Bank of Kenya revealed that mobile money users transacted 5.84 trillion shillings over 8 months. That's an increase of about 5 trillion shillings from last time. Transaction volume expanded significantly, with the total number of transactions rising to 204.17 million shillings to 214 million shillings. Concurrently, the total value of transactions grew from 705 billion shillings in July to 705.91 billion shillings in August during the same period. All right, let's get a check on the crypto market now. Definitely it's a new trading week, the last trading week of October. Let's see if the bulls can do something. But we're seeing a green on the screen right in the crypto market with few pockets of red. Bitcoin, $68,635, a jump of 2.18%. Right there. Let's look at the sentiment in the market, how investors feeling in this trading week. We know it was last time was getting to neutral, but now it's back in greed. With that big move we're seeing with Bitcoin. If we look at top cryptocurrencies that we track, we see the likes of XRP. That's some traders have called it a stable coin at this point, but it's up 1.51%. Cardano 1.80%. So big moves up. BNB, that's the token for the cryptocurrency exchange. That's Binance there, trading up 1.84%. Ethereum 2.27%, following with what we're seeing with the big rise with Bitcoin. All right, let's see some top headlines in the crypto market now. We see Hong Kong's securities regulator is set to start fast-tracking licenses for cryptocurrency exchange by the end of 2024, as the region is looking to capitalize on the boom in digital asset trading. Now we see the Indian Central Bank Governor Shaktikananda Das has sounded the alarm on the risk that crypto poses to financial stability and sovereignty. In a speech at the Peterson Institute for International Macroeconomics 2024 event, Das reiterated his concerns about the dangers of legitimizing crypto use and called for international cooperation to regulate the nascent market. Also, we see crypto blockchain network that enables anyone to easily deploy their own blockchain. That's Celestia. That's with the ticker TIA. They're expecting a big unlock on the calendar, which has already sparked concerns of potential sell pressure. We'll see for Wednesday, they're releasing about 175 million TIA tokens valued at $902 million. And this will all be unleashed into the market. So definitely investors are wondering, is the market going to be able to absorb all of that that's coming from the market there? So that unlock is coming. So if you're holding TIA, that's Celestia, then you should be planning what to do with your holdings at this point. Well, let's talk to Solomon Amunde now, financial market analyst. Hello, Solomon. Great to have you.
Yeah, good afternoon, Ladi.
Yeah, so on the back of this Celestia token unlock, we know how token unlocks play out in the market. Investors expect that it's going to be sell pressure once we see the platform, trying to unlock tokens to some of the investors. So what are you seeing with Celestia right now? Do you think it's going to be, do you think the investors will be able to absorb this unlock coming up?
We have already started seeing the sell pressure on the token. Immediately they got the information about the unlock. So to note this, Celestia is currently sitting at its weekly low within the last 7 days. So I would say people have already started reacting to it negatively by selling off. So we just have to wait to see the bottom price that it will drop to. Most likely the next support we should be around in the range of $4 and $4.6.
So I guess this is a time for shorters to have fun with this token.
Yeah, shorters should have already short from yesterday. Right now, it's kind of late to short from today.
Yeah, most of the time, most investors get to these parties really late. So we see the U.S. election, all investors, bracing, for that. But how do you see it impacting Bitcoin? We know most of the candidates there have talked about, cryptocurrency, how most of them, how they plan to, support crypto. We even had the likes of Donald Trump there at a crypto event, ramping up confidence, with most of those cryptocurrency enthusiasts. So how are you seeing this impacting Bitcoin and Ethereum price action?
I think Bitcoin will be the biggest winner to affect the price of Bitcoin positively. We have already started seeing that play out. I mean, barely 10 days ago, we saw Bitcoin correct to almost 65K. And right now, we're seeing lots of green. So I'm expecting to see some good movement and good price action on Bitcoin. Most likely, we're making a move for $71,000 again. So between now and the day of the election, I should expect us to go above $70,000.
So another wild story here. We're seeing meme coins. We know how most traders like to, enjoy some of these rises in the meme coins, and we've seen some persons, according to data, turn $100 into $100,000. That's quite incredible. But with the meme coins, but I'm still wondering. Some of those traders, they've been in that market long enough. I know some of them don't like to touch, meme coins. So who are the traders enjoying most of these profits with meme coins?
It's majorly traders that move with the trend and that move with the hype, and also traders with good liquidity. They are the ones making the most of meme coins, because we know the crypto market is fueled and moved by narrative and trends. And if you want to stay on top of the market, I want to stay profitable long term, you just have to adjust as fast as possible to trends. So the traders that were able to adjust early on to the AI meme coins trend, they are the ones making the most returns, whereas those that have refused to adjust, they are not making that much returns yet.
And how long do you see this meme craze continuing for?
Yeah, I strongly believe it will last for a while. I strongly believe the narrative is quite strong. So I see this lasting for as long as the bull run lasts. The meme coin craze, I expect it to last that much. In fact, I would expect to see a meme coin super cycle actually.
Right, and what happens to all those other coins that are supposed to be, projects that have real world use and doing something real in the world? Is it that, traders don't care about all those projects anymore?
Yeah, sadly, most traders don't care about lots of those projects again. And also some investors too are beginning to kind of like switch their focus to some meme coins. And you won't really blame the traders, because of most of these projects have ended up being failed projects or abandoned projects with very large token unlocks that makes the price extremely unstable. And most times it makes it like a pump and dump, where after the token maxes out at a particular price, we start seeing lots of unlocks over the next months and years, and the price just keeps dumping. So most persons are not really excited about the return on investment for most utility projects. That's why they are pivoting to meme coins more these days.
All right, so I guess they're just having fun with some of these, meme coins, some goats, dogs, rabbits, different animals and weird names, at this point, with over 2 million trading in this market. Definitely not easy for, for traders to, navigate most of these meme coin projects. But let's look at Solana now. We see the blockchain is topped with the highest on-chain volume with about $13 billion volume. That's for that Solana blockchain. What do you think is bringing this much volume, to the Solana blockchain?
Yeah, Solana blockchain is massively benefiting from the meme hype, meme coin hype, and the meme coin run. They have been reaping the most profits actually, and they are like, should I call them the pioneers of the meme rally we're seeing this year? They're actually making it easy for almost all platforms, and they have also taken time to build the infrastructure for these meme coins to thrive. So it's no surprise that their trading volume has gone up to over $13 billion within the last 7 days. And I expect it to also increase over time. I mean, initially we could see Solana do $1.4 billion $1.4 billion trading volume daily. Last I checked, we saw them max out at almost $4 billion daily trading volume, which was really, really amazing. So I'm not really surprised. 90% of the memes are on Solana, and we have hundreds of memes created every day on Solana with insane trading volume. So it's no surprise, actually.
But in the long run, I keep wondering how this whole meme craze is going to play out, and how many bag holders will end up holding most of these coins. But is this going to play into the Solana token price? Most of these volume we're seeing on the blockchain.
Yes. Invariably, we are going to see the price of Solana appreciate drastically. Most likely above $300. We will see that because the more meme coins we're having on the Solana ecosystem, the more Solana tokens are being locked in liquidity pools, and the more scarcity of Solana that we're seeing in the ecosystem. So a whole lot is happening at the same time. So like it or not, there will be less sell pressure on the token itself. There will be less Solana tokens to go around, and this will create some form of scarcity. And over time, it will impact the price of Solana positively, obviously. So I'll be expecting the price of Solana to easily go above $300. I mean, they have already beat Ethereum on weekly trading volume. It just needs a few more boxes to tick, and we'll start seeing Solana rally to new all-time high. All
right, we'll keep watching and see how the Solana blockchain plays out. Thank you so much, Solomon Amunde, financial market analyst. Thank you.
Thank you very much, Danny.
All right, that's the show today. The first one for this week. You can watch this again on our YouTube channel. You can also follow the conversation on X. Just go on there and search for Channels Television. From me and the team right here at Channels HQ in Lagos, Nigeria, it's bye for now.